Imagine opening a chart and seeing more than random candles, a support zone where buyers previously absorbed selling, a resistance zone where supply returned, and a complete plan before you risk $1. Support and resistance can help organize an entry, an invalidation point, and a target, but they are evidence zones, not promises. In this video, we will build that map, then turn one synthetic setup into exact trade calculations. The catalog connects the full workflow. Causal pivot detection and zigzag segmentation find confirmed swings. Support and resistance clustering and robust trendline fitting turn swings into horizontal or sloped structure. Volume profile, point of control, Fibonacci projections, and round numbers add candidate levels. Zone fusion combines sources. Strength and decay scoring ranks their evidence. Role reversal plus breakout and retest detection tracks state changes. A proximity scanner can then rank instruments for review. We will simplify each step without hiding its limits. Support is an area below price where prior demand or buying interest was visible. Resistance is an area above price where prior supply or selling interest was visible. Use a band, not a pixel perfect line, because trades occur across prices and volatility changes. The first guardrail is causality. A swing high or low is not confirmed until enough later bars arrive. Plotting it backward is useful for charts, but a live system must carry both the event time and the later confirmation time. Start with confirmed pivots. Zigzag can compress small reversals into larger alternating swings. For horizontal levels, the catalog groups same kind pivots with density clustering in log price space. With a 50 basis point neighborhood and 3 required touches, resistance pivots at 100, 100.3, and 99.9 form a cluster with a median near 100. A pivot at 105 remains noise. For slope support or resistance, robust trendline fitting keeps the pivot consensus instead of letting one outlier rotate the line. One method is rarely enough. A price by volume profile can contribute the point of control, value area edges, and high volume nodes. Fibonacci uses explicit anchors. For an upward leg from A to B, a retracement is B minus the ratio times the leg, while an extension adds the ratio times the leg from a third anchor. Round numbers add a declared price grid. Zone fusion groups nearby candidates, requires distinct source types, and calculates a bounded zone center. Strength scoring then adds source diversity, recent touches, and rejection size, while age and confirmed breaks reduce the score. The score is a diagnostic, not a probability. Now, a synthetic bounce plan. Suppose support spans 99.5 to 100.5. Price tests the band, then closes bullish at 101. That close is the planned entry, not an automatic order. Put structural invalidation below the zone at 98.8. Risk per share is entry minus stop. 101 minus 98.8 equals 2.2. The next resistance is 105.5, so potential reward is 4.5. Reward divided by risk is 4.5 over 2.2, about 2.05 R. Position size comes from the risk budget. With a $10,000 account and a 1% maximum loss budget, account risk is $100. Divide that by $2.20 risk per share. The raw result is 45.45 shares, so a whole share rule rounds down to 45. Planned price risk becomes $99. Fees, spreads, slippage, gaps, and partial fills can make realized loss larger, so production systems reserve an execution buffer and check instrument lot sizes. A zone defines invalidation. The risk policy controls survival. A breakout is a sequence, not one candle above a line. Suppose resistance spans 110 to 111 with a 20-cent buffer and two close confirmation. Closes at 111.4 and 111.7 are strictly beyond 111.2. Price then returns. A low of 110.9 contacts the zone, and a close at 111.5 holds above it. A planned entry at 111.5, stop at 109.8, and target at 116 gives 1.7 risk, 4.5 reward, and about 2.65 R. After confirmation, old resistance may become support, and broken support may become resistance. The catalog models this as a state machine: active roll, buffered break, awaiting retest, zone contact, directional hold, then confirmed opposite roll. Failure or expiry is also an output. This prevents a scanner from flipping labels after every noisy close. Traders use the state to choose between a bounce plan, a breakout retest plan, or no trade. The state organizes evidence. It does not predict whether the next trade wins. For a long trade, a structural stop usually belongs beyond support or beyond the retest failure point, not inside ordinary zone noise. A volatility buffer, such as a declared fraction of average true range, can adapt that distance, but it must be fixed before evaluation. Targets can use the next opposing zone, a measured swing, a Fibonacci extension, or staged exits. Calculate long trade risk as entry minus stop, reward as target minus entry, and R multiple as reward divided by risk. For shorts, reverse the signs. Reject any plan with zero or negative risk and include transaction costs. The common traps are easy to recognize. One touch is not a level. A wide cluster may hide several regimes. A pivot chosen with future bars leaks information. A Fibonacci ratio does not guarantee a reaction. A high strength score is not a win probability. A breakout without retest is still awaiting evidence under this convention. Stops can gap through, and tuning every tolerance after seeing the profitable trades is overfitting. Validate detection separately from trading usefulness, then test costs, market regime, and out of sample behavior. Here is the complete process. Confirm pivots causally, build zones from repeated evidence, add independent sources without double counting, track strength, decay, break, retest, and roll reversal. Then define entry, invalidation, target, reward to risk, and position size before execution. Use the result as a transparent decision framework, never a guarantee. Next, support and resistance clustering goes deeper into how repeated pivots become auditable zones. Continue the full learning path at thefintechbuilder.com. Build the next support and resistance clustering lesson. Inspect the source code and continue learning at thefintechbuilder.com.